Investing is important. Investing grows your money. You work hard for your money. Make your money work hard for you. Investing can be for the long term, or it can be for the short term. Let's learn about both. Investing involves risk. You can make money. You could lose money too. You are a smart investor. Smart investors learn before they invest. Long-term investing means patience. Buy and hold for years. Look for good companies. Good companies will grow in value over time. You make money when the company grows. Long-term investors ride out the bumps. The stock market goes up and down. Don't panic and sell when the market drops. If you picked a good company, it will recover. Value investing is like treasure hunting. Find good companies that are undervalued. Maybe the market doesn't see their true worth yet. Buy these companies at a bargain price. Hold them for the long term. Their value will eventually be recognized. This strategy takes patience, but it can be very rewarding. Growth investing is about finding the next big thing. Look for companies that are growing quickly. They might be developing new products or expanding into new markets. Growth companies often reinvest their profits. They focus on getting bigger. This can lead to big stock price increases, but be careful. Growth investing can be risky. Section 5. Understanding short-term investing. Short-term investing is fast-paced. Buy and sell quickly, sometimes within days, hours, or even minutes. Try to profit from quick price changes. This type of investing is riskier. Short-term investing requires skill and knowledge. You need to understand technical analysis. You need to be able to read charts and graphs. Section 6. Short-term strategy, day trading. Day trading is the most extreme form of short-term investing. Buy and sell stocks within the same day. Aim to make small profits from small price movements. This is very risky. Day trading requires a lot of time and focus. You need to constantly monitor the markets. You need to be ready to act quickly. Most day traders lose money. Section 7. Short-term strategy, swing trading. Swing trading is a bit slower than day trading. Hold stocks for a few days or weeks. Try to profit from price swings within a larger trend. This is still risky, but less so than day trading. Swing traders use technical analysis. They also look for news and events that can move stock prices. Section 8. Which investing style is right for you? So which is better? Long-term or short-term investing? It depends on you. Are you patient? Do you have time to research companies? Then long-term investing might be good for you. Do you enjoy fast-paced action? Do you have time to watch the markets all day? Then maybe you are a short-term trader. But remember the risks. Learn as much as you can. Start small. Most importantly, invest in what you understand.